Well, good afternoon and welcome to the Market Wrap for Monday, the 9th of March. And look, today was quite a rough day for Aussie investors. So by the end of the session, we were down by almost 3%. That was our worst day in almost a year. You have to go all the way back to last April to see a worse decline for the Aussie market. But believe it or not, we were down even more earlier on in the session, down as much as almost 4.5%. So at the end of the day, down by about 2.85%, certainly better than that 4.5% decline we saw during the session, which would have actually been our worst day since the 1st of May 2020, back in the days of COVID, almost 6 years ago, which is very hard to believe how quickly time has passed. So look, at least we narrowed those steeper losses, but still a very rough day for Aussie investors on fears of a drawn out and widening conflict in the Middle East. What we've seen is markets essentially repricing for a more prolonged conflict in the Middle East. So those hopes that the conflict will be resolved fairly quickly, they just continue to fade, with share markets dropping around the globe and oil prices continuing to spike, with investors growing increasingly concerned that the surge in oil prices could add to inflationary pressures and also hurt the global economy. So very much a risk-off mood going on. Now, across the different sectors, it was largely a sea of red, with the exception of energy, with oil prices extending last week's record 36% jump, with oil up an eye-watering 29% at one stage today, touching almost $120 a barrel, its biggest intraday move since April 2020, but then it did narrow gains to around 17%, with major oil producers scaling back production, saying they've run out of storage space, considering the Strait of Hormuz remains shut, with more production cuts expected as oil tankers continue avoiding the area. So we did see energy stocks standing out amid a sea of red today, up by 1.7%. Gold and silver prices, however, have been falling, pressured by a stronger US dollar, and that's certainly not been helping the materials sector, which slumped by close to 5% today. Tech down a similar amount, industrials and healthcare down over 3%, financials down 2% in a session of broad-based losses. Now, there weren't many winners at all today. In fact, only 11 of the top 200 stocks gained ground. Now, unsurprisingly, most of them being in the energy space, including coal, oil and gas companies. Coal miner Yancoal did best, gaining over 13%, tracking a lift in coal prices. Karoon Energy was second best, up by around 10%. Santos and Woodside up between around 2 and 3% in today's session. But in terms of losers, losses could be seen almost right across the board. Some of our largest stocks dragging the market down most, including BHP, which fell by a whopping 5%, dragging the market 40 index points lower in today's session. The major banks also posting sizable drops, with CBA doing the most damage due to its size. And in terms of percentage moves, Dyno Nobel did worse, falling by almost 10%. After news that it's selling its fertilizer plant for a nominal $1 as it exits the fertilizer business to focus on becoming a pure play explosive business, with the buyer Mayfair, an experienced Australian operator, taking on the site's economic risks. A deferred consideration of up to $100 million is payable to Dyno Nobel, subject to certain conditions and meeting certain performance hurdles. So it was the worst performer today, and a data center operator DigiCo announced that its CEO will take a period of extended personal leave to spend time with family and to work through a personal matter. An interim CEO has been appointed over this period to ensure business continuity. So DigiCo down by over 7% today. I'll also quickly mention that airlines are continuing to be under pressure. Qantas was down 4.5%, Virgin down 5.5%, travel agent Flight Centre dropping by around 2%. That being said, though, even defense stock DroneShield wasn't able to escape the selling today. It was down by around 9% to be the second worst performer in today's session. So there was almost nowhere to hide. Now, in terms of currencies, the Aussie dollar has continued to lose ground. Actually, it's dipped below 70 US cents during today's session, down from its recent 2-year high, as investors pile back into that greenback as a safe haven asset. But it has currently ticked back up to to around 70 US cents, firmer against the other currencies, including the euro and the yen. Now, looking ahead to tonight, it looks like it's going to be another rough session of trade for Wall Street. At the moment, the Dow futures are pointing down by 1.5%, the S&P 500 down 1.4%, and the Nasdaq down 1.6%. In terms of tomorrow, things to watch out for: a couple of stocks trading ex-dividend, including the likes of Coles, Qantas, CSL, and a whole handful of others that could potentially add extra pressure to the market. Tomorrow, we have Magellan paying out their dividend, and we also have consumer and business confidence surveys being released tomorrow morning to keep an eye out for. And of course, those developments on the conflict in the Middle East will be very closely watched. Have a nice night.